Hello, everybody. Welcome to the sixth Capital Hydrogen Consortium meeting. Lovely to see you all in our first consortium meeting in 2026. So all very exciting, and we've got a bit of a different lineup planned for you all today. We've got a panel session, so a bit different to our normal meeting, but we thought we'd make it a bit more interactive and give all of our attendees the chance to ask their own questions to some of our expert panelists. Just by way of introduction, my name is Michael. It isn't Capital Hydrogen by the what it says at the bottom of my screen, but I've joined from the Capital Hydrogen account. But my name's Michael, so myself and the team deliver the Secretariat service for the Capital Hydrogen program for on behalf of Cadent and National Gas. So just getting started. So for housekeeping, as you probably are all aware, this is a normal Teams meeting, so you can all turn on and off your cameras and your microphones and put questions in the chat. We just ask that while people are speaking and during the panel session, unless you've got a question to ask, then please do turn off your cameras and microphones just to help with quality, increase bandwidth and make sure there are no accidental distractions. We've got the chat and the Q&A function open. If you can, please put any questions you may have in the Q&A function, but you can also put them in the chat as well if you'd like. The meeting will be recorded and we will distribute this and the slides afterwards if you miss anything. Okay, so moving swiftly on to the agenda. So as I mentioned, we've got a bit of a panel session style format today. However, before that, I will be going over the consortium members and our comms update before handing over to Donald, who will be providing an update on Project Union, and then we'll be going straight into the panel with our expert panelists from Cadent, National Gas, Hydrogen UK, RES Group and Hygen, and then we'll open up to an open Q&A afterwards if you have any other questions. But as I said, if you do have any questions throughout the meeting, if you don't want to forget what you wanted to ask, then please do put them in the chat and we'll get to them at the end. So just quickly, the Capital Hydrogen Consortium is looking very, very healthy. As you can see, we interact with members from across the hydrogen value chain, whether that be potential demand users, midstream, transportation and storage, potential producers, and then obviously government, regional and third sector authorities. And everyone in between. And I'd also just like to welcome Amentum, who's our latest member to join the Capital Hydrogen Consortium. I'm not sure if we've got anyone in the call from Amentum, but please feel free to make yourself known if you're there. Very warm welcome to the Capital Hydrogen Programme. We're delighted to have you on. It's great. So just a quick sort of general update about the wealth of the program. So we've got, as I mentioned, a growing member base. It's continually updating. We get a lot of interest from organizations from across the hydrogen value chain. Those will be interested to get involved in the program and the initiatives that it encompasses. We have a dedicated news page, so this is a sort of a call out to each and every one of our members. If you do have any really interesting projects going on in the hydrogen space within London, the east of England and the southeast, please do let us know, because it'd be great to know about these initiatives to sort of shape the future of the hydrogen industry within the region, for potential future consortium meeting calls as well, and any news that we can share on our website to really big up the status of the industry and the confidence that we have in the direction of the sector. We've got over 1,000 followers on LinkedIn, so please do follow us at Capital Hydrogen on LinkedIn and engage with our posts. And again, we can always share news from across the consortium as well if you do have any news yourself to share. And then obviously we will be slowly reaching out to our members if they do have initiatives and programs and projects going on within the region to produce case studies and blogs and anything that can help us to basically show the rest of the industry that actually hydrogen has got a really huge part to play across the region, and that's essentially what all the program is about. So without further ado, I will hand straight over to Donald, who is going to give an update from National Gas on Project Union funding.
Thanks for that, Michael. Appreciate that. If we move on to the next slide. So by way of introduction, my name is Donald Oleforo. I'm the head of hydrogen program at National Gas. I'm leading on the strategic initiatives and the rollout of Project Union, which is our plan to build out a 100% hydrogen pipeline network across Great Britain. And then if you move on to the next slide, please. Before I get into Project Union, just a reminder for those who don't know who we are. At National Gas today, we maintain and operate the national transmission system, moving molecules of natural gas across the country, supporting businesses and domestic supply as well. And as part of that, and in terms of our customer base, we also support power generation companies, as well as multiple industrial off-takers across our 7.5 or just over 7,500 kilometers of pipeline, high pressure pipeline across the country. Then if we move on to the next slide, please. So just an update, if you click through to the next, yeah, that's fine. Thank you very much. Yes, so in terms of what Project Union is, that's our plan to build, I said earlier, to build out a 100% pipeline network across GB by the 2030s. Our initial estimate is that the network will be around 2,500 kilometers in length. And the beauty about the program is we plan to repurpose some of our existing assets that we use today on our methane network. And of course, in some cases, we'll have to build new pipelines to enable Project Union, happen connecting various hydrogen producers with demand centers and storage sites across the country. Then if we move on to the next slide, please. So just to give everyone an update in terms of where we're at today, and maybe before I do that, of course, the network, Project Union, we're not going to build it out in one go. And so what we've done is we've split the plan into nine sections, if you like, looking at taking into account the different clusters across the country. And we're looking to, we have started with our feed program, if you like, on the first phase of our network, which is we refer to as East Coast. So sorry, the slide's a bit busy there, but East Coast leg will see us connect Teesside and just down, just below the Humber. And it's quite an interesting section there, connecting a decent amount of potential hydrogen off-takers as well as developers. And also that area offers opportunity for hydrogen storage. The feed program, we have received funding from Ofgem, which has enabled us to start front-end engineering studies. We started that back in June, July of last year, so just 6-7 months into that program at the moment. The next legs, which is Serious Connect St. Fergus down to Teesside, so sections 2 and 3 on the slide there. We have also received funding for those from Ofgem, as well as connecting the northwest of England. And the funding we got from Ofgem towards the back end of last year. And where we're at the moment is obviously taking learnings from what we have experienced so far in the East Coast and working towards developing what that program of work would look like and developing a timeline for when we will kick that up. But we're looking to provide an update in terms of when those legs will start later on in the year. So just to recap briefly. So we have funding for those, let's call them 3-4 sections. So Teesside to just south of Humber, St. Fergus to Teesside, as well as the northwest leg. The other sections, so sections 5 through 9 on the slide there, we don't have funding for those as yet, and funding for feed and construction will be determined by DESNZ through the hydrogen transport business model, and for which we're waiting guidelines of how that would work going into the next few years. So we'll move on to the next slide, please. Just a summary slide here. There's one thing to stress here with government policy so far, and of course funding from Ofgem is great to see. That's good news for the hydrogen economy with the support of the feed funding that we received so far to meet the goals and aspirations of UK government as published. Again, just to recap here, Project Union, as I said earlier, the plan is to build around 2,500 kilometers in length of pipeline by the mid 2030s, leveraging existing assets and building new. I think the good thing about this is by repurposing assets offers the hydrogen economy two things. One is reduce cost because we're repurposing assets, and ultimately for the taxpayer, it means that we are optimizing existing assets and therefore reduce cost overall in building and laying out the pipeline. And then finally, again, it's good news from our standpoint with the start of FEED for the East Coast leg of Project Union and funding for the Scottish leg and connection into the Northwest. Overall, so far, we remain optimistic and positive with the support from government so far, and looking forward to the build out of the network. So I think that's all for me from now. Of course, I think you'll have the opportunity to take questions as we go through. But I think if we move on to the next slide, I think that's it. Yeah. So thanks, and we'll be taking questions later. Thanks, Michael.
Great. Thanks, Donald. We will. I think there's a question for you in the chat, so I'll move on. But if you wanted to answer that over the over message, then feel free to from Jerry. But we will we'll carry on for now, and then we'll move into the Q&A afterwards. So just so as I mentioned, we've got a panel session planned today. So initially, I'd like us to essentially meet our panelists. But what I'll do is I'll hand over to Kelly Manders, who is our chair for today's panel session and also our main contact at Cadent. So Kelly, take the floor.
Thanks, Michael. Well, welcome everybody. I hope this panel session is of interest to you as Capital Hydrogen members. We thought we'd try something different and we'd welcome any feedback. But we'll start by introducing our panel members for today. So I'll be your chair. I'm Regional Development Manager at Cadent, and I lead the Capital Hydrogen programme on behalf of Cadent alongside our partners at National Gas and SGN. So the Cadent role within this programme is specifically around the East London Hydrogen Pipeline, which we held the launch event for in the summer last year. But the whole programme covers the east of England, the southeast, and London as well. So I'd like to now move ahead and introduce our panel members. So you met Donald earlier, so I won't ask him to introduce himself again. If I could introduce Joseph, if you could just tell me a little bit about the work that you do at Hygen UK.
Yeah, of course. Thank you very much for the introduction. Yeah, so I'm Joe Greaves. I'm a policy advisor at Hygen UK. So we're the UK's kind of leading trade association, the hydrogen sector. We've got about over 100 members, representation across kind of the whole value chain, whether that be people looking to deploy electrolytic production, looking to deploy CCUS-enabled production or pyrolysis pathways, people in networks, transport and storage network development, and then in the industry side as well, and in the supply chain and transport. So we've got a really good kind of cross-section of the industry. We do a lot of work, kind of advocacy work on behalf of that membership. As you can see there, I've put a couple of links down and pictures of our reports splitting the difference in driving demand. Basically looking at the kind of the key areas of the hydrogen sector that probably need tweaking to accelerate that deployment, which I think is quite fitting because that's some of the questions we might be discussing later today. We regularly engage with government at all levels on behalf of the HUK membership, and we value that connection with people like DESNZ and the LCCC as well. And obviously, of course, we're host of the annual conference as well, which we always like to highlight as always a good event to attend if you're in the hydrogen sector. So quickly, I won't ramble on too much more, but our structure is basically split across the different sectors of the hydrogen value chain into working groups, and I lead up the electrolytic and the CCS-enabled production side. So yeah, that's me.
Thanks, Joe. Brilliant. Thank you. Yes, the Hygen UK conference and awards is always a good night. So yes, welcome to promote that. So if I move on now to introduce Bola Sangusunya from RES, and if you could just introduce yourself and tell us a little bit about your hydrogen project that you're working on.
Thank you, Kelly. Good afternoon, everyone. My name is Bola Sangusunya. I'm a senior manager with Renewable Energy Systems Limited. My background is grid and electrical engineering, but for the past 20 odd years, I've been doing project engineering and project engineering management in renewable energy technologies, so across different technologies. So I've worked in biomass, wind, battery storage, and more recently, green hydrogen. And my pioneer project is the Notfleet HPF hydrogen production facility, which is located in Kent, which I will talk about in a minute. But just before that, a quick plug on RES Limited. RES Limited, for those that don't know, is a global leader in the development, construction, operation, and we also do asset management of renewable assets globally. So we don't own assets, but we develop, we construct them, we operate these assets, and then we also do some asset management. So we have our hands across the whole life cycle of a project, from conception to its decommissioning. And so, as I said recently, or say recently, for the past 4 or 5 years, I've been working in green hydrogen. And one of my first projects is the Notfleet project that we developed in Kent. Notfleet was one of the 11 successful projects in the first hydrogen allocation round, which is the government supports scheme for green hydrogen projects in the UK. The Notfleet project has been developed in conjunction with Kimberly-Clark, the big toilet paper company, makers of Andrex toilet paper tissues, which they specifically make in their Notfleet mill. So we've developed this project with Kimberly-Clark in Notfleet, and specifically for the Notfleet mill, and Kimberly-Clark will be the sole off-taker of the hydrogen that we produce. The hydrogen produced by the Notfleet hydrogen production facility will be displacing natural gas that Kimberly-Clark currently use in the production of their toilet paper tissues. The hydrogen will be combusted in new dual fuel boilers. So when I say dual fuel, it means they're able to burn both natural gas and hydrogen. When we're producing hydrogen, they will be using the hydrogen in these new boilers to generate steam that is used in the drying process in the manufacturing of the toilet paper. The plant itself is a 16 megawatt facility. 16 megawatt is roughly equivalent to 10 megawatt HHV of hydrogen, and will consist of a number of electrolyzers, about 500 meter cube of hydrogen storage tanks at 30 bar gauge. It's exactly the same pressure that the electrolyzers produce the hydrogen. And then we have a short run of pipe between the facility and the Kimberly-Clark boilers. So that's another unique thing about this project. It's actually co-located with the off-taker. So we are using Kimberly-Clark's land, and we're located right in the middle of an operational mill, which has had its challenges, but I suppose the key advantage is that we only have a short run of pipe between ourselves and the off-taker. It's roughly 300 meters of buried hydrogen pipe. So the current status of the project, we've taken you through the planning stage and the permitting, environmental permits that is required. And we're looking to break ground in the next week or so, actually. So maybe later this month or early next month, and we hope to be online generating hydrogen by Q4 of 2027. The other key thing I forgot to say is that obviously it's an electrolytic plant. It needs electricity, it needs water, and we need to discharge effluent. So we've got these connections also being built for the plant. So that is just a short overview of the Notfleet project that we're developing in conjunction with Kimberly-Clark. Thank you.
Brilliant, thank you, Bola. That's really exciting to see that this is actually happening. For you to be starting construction this year is a really exciting concept, I think, for everyone on the call to see the aspects of hydrogen projects really moving forward. So congratulations on getting as far as you have so far. We'll come back to you on some of the challenges, I think, on the project and some of the aspects that we want to go through in the discussion. But if I move over now to Rebecca, and if you wanted to introduce yourself, Rebecca, please, and give an overview of your hydrogen project in the region.
Yeah, no problem. So I'm head of project development at Hygen. So we are part of the Hydra B hydrogen group, so including Rise Power and Right Bus. We've got a fleet of well, a variety of HAR1 and HAR2 projects, and our operational plant in Tyseley currently. So my role is kind of managing the delivery of or the development on all of those HAR1 and HAR2 projects. But most notably, I guess, relevant for this region is our Half Lane project. So this is a shortlisted HAR2 project, which is being developed in partnership with Tarmac. So this will be a 20 megawatt co-located project within the Tarmac asphalt plant. They will be using similar concepts to Bola's site, but they'll be burning this hydrogen in a tri-fuel burner as part of the asphalt process. This site will also have export capacity, so we'll be tube trailering off some of that hydrogen to support the kind of wider London area and its use of hydrogen. So it aims to have the kind of industrial off-taker as the baseline off-taker, and that allow us to facilitate hydrogen production for other industries as well. This project's a little bit earlier on in its development, so it's obviously part of the shortlisted HAR2 process. Hopefully we will hear soon the next stages of that. I'm sure that's one of the many challenges people raise, but it's kind of going through the early planning process at the moment, and the technical build-up of it. So apologies, I don't have a site layout at the moment. It's very much in flux, but so you see it's kind of north of London, and based in the middle of the asphalt and concrete plant, so very much in the thick of the industrial off-takers site.
Brilliant. Thanks, Rebecca. Again, a great overview of an exciting project that's in this region and moving forwards at pace, I think, is the really positive thing. So I want to start the discussion really by thinking about kind of the projects that you've talked about, how they're going ahead and how they're developing. And at the moment, we're very much in the space of kind of point-to-point delivery. So, production, on-site production and on-site usage. How do you see your project supporting kind of the wider deployment in the southeast? Rebecca, you mentioned that you perhaps will be able to share some of your hydrogen that's produced. How do you see that developing and growing as we move forward?
Yeah, so for our project, the aim is, so we're developing a project up in Bradford, which is purely export led, which is quite challenging from an off-taker perspective. So it's probably the opposite to a number of the HAR1 projects, which are kind of industrial first. The aim of our project here is to try and have the comfort of the industrial off-taker, who is normally quite a baseline user of hydrogen, which helps with a lot of the kind of managing exactly the export restrictions and the logistics around actually moving that hydrogen off-site. But by being able to kind of put a portion of that into the industrial off-taker, we can then use the remaining of that with the kind of less certain off-takers. So we find a lot of, we look largely at bus companies, given our connection with Right Bus, and getting the timing of all those off-takers to line up can be quite challenging. So this is what I think makes this project quite interesting for us, is that actually by having the industrial support, it gives us a lot more flexibility to help enable the wider region via tube trailers or whatever it may be in a few years' time, as it may change how we move that hydrogen around depending on how some of the other pieces develop.
Okay, brilliant. Thanks, Rebecca. And I think you're right. I mean, we're all waiting on another announcement of a large infrastructure project that wants to use hydrogen right here in the region, and all of these aspects coming together is a challenge to make sure they're all on the same timeline. Bolo, did you want to add anything about your project and how you feel it's kind of a fundamental part of the jigsaw in the development and deployment of hydrogen in the region?
So I think the first thing is the benefit to the directly connected off-taker. So like I said, the project is being developed specifically for Kimberly-Clark, and they're the sole off-taker for this project. But when we're up and running, the hydrogen that we'll produce will help Kimberly-Clark decarbonize the product, the mill, and specifically at Northfleet to make Andrex toilet paper, which is a a well-loved household product. So I suppose the first thing is that it helps to decarbonize this well-loved product. And yeah, loo rolls are no mean feat. We all know how much we love and treasure our toilet paper from the COVID period. So yeah, and like Rebecca said, what key for us to successfully build and operate the project, because it then encourages other industrial users, especially in the CMG sector, to take up the use of hydrogen as well as a means of decarbonizing their process. And also the other thing is that even now we're creating highly skilled jobs in the sector. So we're not even into construction yet. We're just developing and going out into the supply chain, and we already see creation of jobs. So this project will, promote and encourage the creation of highly skilled green jobs in the sector, and hopefully we see an influx of transferable skills from other well-established sectors that then promotes the hydrogen sector and puts it in a strong fit as a viable technology for the future. Yeah, so I think those are the key benefits we see, but also I would like to think that NotFleet is the first of a kind project in the area as well. I think it's going to be the first electrolytic project that is going to come online in the area, definitely in Kent anyway. And as a first of a kind project, we're trailblazing in terms of all the things that we need to establish and construct the project. So we've taken our project through the full infrastructure planning and permitting process. At the time we were doing it, it was first of a kind for the local council, the Gresham Borough Council. So we had a lot of iterations and a few hiccups with them. I like to think that since NotFleet is trailblazed on this, any future projects coming online will find it a little bit easier because the council has been through the process with us. And I would like to think that is helping to set the pace for the hydrogen economy in the sector. And it's not just planning and permitting, it's all the utility companies that we've had to work with. We've had to work with grid, water, effluent companies, even the supply chain. And I think by trailblazing, we're helping any projects that come behind and establishing green hydrogen as a strong contender for the future.
That's brilliant. Thank you both for that. If I could just bring Jo in on that aspect. I mean, obviously we've been talking a lot about the technology. We think the technology's there, the equipment's there, the testing and the trials have shown that all to be, ready to go. What are the challenges or the barriers that are still in place for kind of projects like this to get moving and then to scale up and get larger, in your perspective?
Yeah, of course. Yeah, happy to take that one. I mean, from Hygen UK's perspective, and as I said, I sit mainly across the two production working groups, so I see it a lot from their perspective. I'd probably go, the first big thing from a policy perspective that people care about is certainty, and people are really looking for kind of something to base their investment decisions on at the moment. I think these big set piece events, like we had the hydrogen strategy back in, the first one was at 2022. They really give a good indication to everybody out there who's developing projects like this, that this is what we want, this is where we want it, this is how soon, what scale, and everybody can make their plans in accordance with that, and it can really kind of give a sense of momentum. But as things start to delay, it can kind of slow things, and that can turn into a bit of a barrier because people can kind of be a bit less forthcoming with that investment and hold back on some of those projects. So I think in terms of policy, to kind of accelerate some of this deployment, we could do with seeing a bit more clarity. We want that hydrogen strategy out that I'm sure everybody in this call very much wants to see as well. We want to see those policy developments coming alongside it. Good clear line of sight on future projects coming through that kind of, like Rebecca touched on there, the HAR2 projects. We want to see a clear line of sight on how quick they can progress and beyond, so everybody can start to build up that sense of momentum and some acceleration. Another good example is the especially relevant to this group is the transport and storage piece with the second allocation of a transport and storage network. People are developing fantastic projects, and they just want to know when they could be possibly deploying this. If it's not in the first one, you want a bit of line of sight on the second. I guess the second one is I'm saying this to, I think I've already won over the crowd with this one, is kind of making policy progress on TNS delivery. Transport and storage networks are just completely critical to enabling projects like Bowler and Rebecca's. I guess the first ones, like Bowler said, these kind of projects that are cited with an industrial offtaker are fantastic and they trailblaze. But if we want to make meaningful scale and we want to get it hydrogen available to a wider array of off-takers and a wider array of producers, we need government to start making progress on those TNS networks. I mean, the 500 million that they allocated in the CSR back the comprehensive spending review back in the day, earlier in 2025, I think it was, wasn't it? It was fantastic. I think everybody was really welcoming of that. But we want to see more. We want to see where that's going. We want to see how it's going to progress. As again, it comes back to that sense of momentum, I feel. And then the third one I jotted down was just we could do with seeing some policy movements on getting production costs down. I think hydrogen production they're all novel technologies, as you said, Kelly. We're seeing a lot of progress in these technologies, and they're starting to be proven in the field. Like the North Fleet project is going to be in construction very shortly, which is fantastic. But I think there are some policy levers that potentially government could start to pull, which start to drive down those electrolytic production costs, so we can get more of these projects out there in the field, kind of delivering value to people, whether it be decarbonisation of toilet paper like the North Fleet project as Bowler described, or whatever hard to abate industry it is. But we could do with seeing those improve the accessibility by getting that subsidy burden down. And again, it comes back to TNS. TNS is going to play a massive part in that, and networks like we've been discussing today on the Capital Hygen project are going to be key. So yeah, I think that's.
Thanks, Joe. Donald, did you want to add anything around kind of large-scale infrastructure and transportation? Obviously, Project Union is moving forward. We're waiting on the TNS competition to come out. Anything you wanted to add particularly around that, and how you see the future? We're waiting on the first one, as Joe mentioned, but what happens next?
Yeah, I think Joe's covered most of the points, but maybe from a policy point, maybe to add there is government's decision on blending as well, right? I think that even though the government has indicated they have a minded position to endorse that, but I think coming out and sort of formalizing that will enable, from a hydrogen developer standpoint, enable programs like that to scale, knowing very well that certainly initially there's an outlet, if you like, for the product or for the hydrogen that they produce. So I think that's one thing that it would be good to get a decision on as soon as possible. I think that piece I'll add, again, speaking to off-takers and water industry, is also some sort of support for potential for off-takers as well, as they transition away, from their natural gas boilers, and maybe thinking about making investment to future-proof their equipment is some sort of support to enable that to happen. And so when you've got producers, you've got support for producers, support for off-takers, and indeed decision, as you say there, Kelly, on the HTBM would be helpful to give that clarity and certainty of the potential future state for the hydrogen economy. Would be helpful.
Great, thanks, Donald. If I could just bring Rebecca back in. I mean, you've got numerous projects ongoing, and you've got projects in region and outside of region, and they're all at different stages. So just give me a feel for kind of the interdependencies that you're reliant on, and what those key challenges are for you in some of those projects, to give us a feel for the challenges you face on a day-to-day basis, I'm sure.
Yeah. So yeah, we've got quite a network of sites, and I think from our side of things, what we want to be able to deliver is a network of sites across the UK. So one of the biggest challenges we have, for example, on our Bradford project, is we're the largest HAR1 project, and it's all export to kind of mobility customers and things, and therefore how do you have backup for that source? Well, the best way to have backup for that is other sites. So we've designed our first site with a lot more redundancy built into it. The ideal for us, and kind of in that, pushing production costs down, is that our future sites back each other up. And I think the biggest challenges we have, I guess our portfolio is there's a lot of interdependency. If we have a whole network of sites, there's different things that we can do and different levers we can pull. Scale of ordering is a massive one. If you've got a number of sites and a pipeline of projects, and you can kind of leverage a lot of the the framework agreements for equipment and also even in standardization of design. But I think we struggle a fair amount at the moment of kind of we've got one, we've got 2 projects in the HAR1 which are kind of can go ahead, and it's like, when will HAR2 happen? How how many will that be? But also, when is that? And I think we find with a lot of people we talk to, both on the offtake side of things and on the equipment supply side of things, they want that certainty about what this looks like. And you can only say I've got backup in London and in Bradford if you do. And I think that's one of our challenges, is how do we progress all of these projects along ideally at as equal rate as possible. We'd love to be right now, being into the later stages of our HAR2 projects based on kind of when it was originally, and that would have been a base towards our HAR1s as they go into delivery, knowing that the HAR2s were coming behind it. But I think this disconnect between the rounds and the certainty about how it makes it quite hard, and I think it makes it hard for off-takers as well to have certainty in the market. The likes of bus suppliers, they always have to run their buses, whether you're running or not, those buses still need to be out on the road, and they need to have that confidence in not just us at Hygen, but the wider market. Equally, we would point to other projects where that supply can be taken from. So I think that's the kind of big challenge we have on that. I think generally in a project development perspective, all of these projects are actually, I always say that the hydrogen bit obviously is complicated, but actually a lot of these projects struggle most on the same things that housing development struggle with, and batteries around planning and consenting, and we have to move those things along, and each one has its own challenge. One site will have bats and one will have something completely different. So I think it's quite interesting when we actually progressing these, that the things we fall down on are often not the hydrogen, they're the bog standard permitting requirements, and how we get through them, navigating it. Not just kind of, hydrogen's new, but actually a lot of what we do is the same as a lot of industrial systems, and navigating the usual parts of that.
Okay, that's really interesting, and it just got my mind ticking through as to kind of how we can share best practice and make sure that we learn from you guys as early developers and pioneering it as you take it forward. But on the other hand, the aspects that you're talking about are general project development, not necessarily new technology related, just going through the grind of the planning focus and getting the permits and things like that. So maybe that's an aspect to consider as we move forward. So Ola, is there anything you wanted to add? How do you see this scale up going? I guess what I'm comparing this to in my mind is, in the UK we've gone for industry-led, off-taker-led development, and that's led to the kind of point-to-point delivery. In Europe, they're kind of big on the pipeline, and they're really pushing forward on pipeline development with much less focus on the production. So I think we'll have production in the UK and we'll have offtake, and then we might struggle to scale up. And in Europe, it might be the reverse. They might have big pipelines available and really not a lot to put in it at this current stage, and not a lot of people connecting up. How can we take best practice from both sides and kind of move the UK forward?
Yeah, so I think it's an age-old question. Do we move the electrons for electrolytic plants, or do we move the molecules? So we've gone with the strategy of moving the electrons for our project, hence the co-location with off-takers, but that comes with its own challenge. Rebecca was listing, general project challenges there, and forgot to mention one very crucial one, the grid. It's a major challenge for us. It's a significant interdependency, and as you all know, the grid network across the country is basically in the right state, hence the need for CP30. So I think that fixing the grid will go a long way in helping us to scale up production, like you mentioned there. And I think for us to really scale up production to the levels that we're seeing in the States, for example, I think we will really need to build our hydrogen pipeline and have legislation and standards that support this in the UK. I think just going back to the Not Free project specifically in terms of the interdependency and the structure that we've taken, or the model, shall I say, because like I said, we are directly located on the off-taker's land with a short funnel pipe to Casey. So they're dependent on us for hydrogen production. We are also dependent on them to make up the volumes that we need under the hydrogen allocation round, and that is in itself leads to a lot of complications that we've tried to manage through commercial clauses in the contracts, in the offtake contracts. So, for example, using take-or-pay arrangements, and also it's building mitigations into the design. So, for example, we've got ample storage on the site, but that in itself then adds on capital or capex spend to the project that pushes up your overall production cost. So it's always a question of where do you spend the money on the infrastructure? Do you put it in storage? Do you invest in pipeline? And I think the question is still very much open. One thing that pipeline does for you is to open up your supply chain, so you're not tied to one off-taker, and you can basically diversify your portfolio in that sense. So yeah, I think strong interdependencies for us with the off-taker, with its advantages and disadvantages, and I think to really scale up, we will need to see the promotion of pipelines and a good network of this across the country.
I think that brings me well then to Donald to bring you back in on the kind of the big network that you presented and how you see that coming together and building upon kind of the other projects that are happening. Obviously, you've got a kind of a clean power focus as well for Project Union and how that will support that policy aspect as well. Did you want to come in on kind of how you see the future coming together?
Yeah, sure. Thanks, Kelly. For sure, the Project Union pipeline, indeed, our pipeline programs will ultimately enable the growth of the hydrogen economy. I think it's sort of twofold there. One is to enable and build resilience, if you like, in the supply of hydrogen to where it's needed. And as Bola mentioned earlier as well, it's giving options to both the producers of the hydrogen molecules and also off-takers. You're not reliant on sort of a one-for-one exchange. So I think pipelines have a role to play there. And maybe to add, initially with Project Union, from our perspective, we're connecting, it's called a cluster. So you've got the East Coast bit, which I touched on there, and then looking to connect into Scotland, where we expect a significant amount of hydrogen to be produced, taking advantage of surplus of wind capacity there to produce hydrogen. But is that how we move those molecules down into England, down into regions that require the molecules, even beyond the clusters? How do we get it into areas where, to businesses that are hard to abate, that can't electrify and need reliable supply of hydrogen? So again, so pipelines are the most cost-effective way to do that, to enable industry to decarbonize and to support companies that are looking to use hydrogen in that decarbonization journey, if you like.
Brilliant, and I think it is about putting the jigsaw pieces together. So for us in the Capital Hydrogen region, we have the East London Hydrogen Pipeline, which is, I guess, an interim of the two. So you've got Project Union, which is large scale, high number of customers, big coverage of the the country with repurposed and new build, and then we have kind of the HAR projects, which are point-to-point delivery, and then the East London is a bit of a mix of the two. So it's, you know, a longer pipeline with multiple off-takers on. And so if I come to Joe then on that, I mean, do you see HAR 3 and HAR 4 evolving to become multiple off-takers and maybe multiple producers?
Yeah, I think what we expect when these developments start to land following the strategy is that there's going to be a big emphasis on getting HAR3 producers, basically the production projects in HAR3, to be very closely aligned with the first network. And I think that'll probably be a blueprint that government try to follow going onwards as we start to roll these pipelines out. They want to make sure that those work streams are lined up, and I think that's massively important. I think from what we've heard today, especially with what Donald was saying there, that you'd be able to produce hydrogen at maybe lower costs with less pressure on kind of meeting constant offtake demand. You can flex a bit more, and I think government do understand that, and hopefully we do see those kind of developments coming through. And yeah, just to say again, I think projects like the London Hydrogen Pipeline are the in-between projects. I think how you put it, Kelly, rather than the national and the local, are going to be key, because they prove the hydrogen sector in microcosm. I guess they prove it in a smaller testable area, and then you can kind of spoke out that as you go. You can expand and branch off, and there's going to be a place for all these levels, because there's always going to be a place for the kind of the co-located sites as well. There's places where it will make perfect sense to have an electrolyzer on site, where you are probably quite far away from a hydrogen pipeline, and it's not going to be feasible in the short term. There's going to be roles for all of these archetypes. So I think government are understanding that we need to see those developments that we're waiting on and be sure and start to see progress on that alignment.
Okay, but in the meantime, we're all just getting on with it ourselves, I think, is the message. And we've got, you know, real life examples here of teams and, you know, working together, the end user with the producer, and a bit of pipeline in between, I think is going to be the model as we go forward. So I think, I mean, that's been a great discussion. I've really enjoyed that. And I think I'd like to bring the Capital Hydrogen members in. We do have some some questions in the chat. So I think a question to you, Donald, is you spoke about the phases of 1, 2, and 3 coming online. Can you give us an indicative timeline of kind of how you see that progressing, and potentially what volumes you're looking at, is the question from Jerry.
Yeah, so in terms of maybe one thing I didn't add, so with regards to the program, so the FEED programs which we've started in the East Coast is going to be a 2-year program, so starting June last year. We're expected to wrap that up in 2027. Now, in terms of the actual construction of the pipeline, that's going to be funded by DESNES through the transport and storage business models. We're expecting the framework sort of guidelines for those to be published later this year. And again, subject to how much money the government has got available, will determine how big we go, and if we are successful in that bid. Now, if the stars align and we are successful in that bid, we'll expect that for the East Coast bid, that we should have something in place, at least for certain sections of it, by sort of the mid-2030s. Again, some of these things are still evolving as we continue to engage with producers and off-takers for hydrogen. With regards to his question around volume, and I think it's been touched on, you sort of alluded to it, you know, the policy guidelines and framework from government gives, once it's published, when it's published, but gives certainty to industry and help organizations make firm investment decisions. We have seen a few, unfortunately, a few producers sort of drop off because they couldn't wait. We've seen some come back on. And so the volume is still sort of fluid, but certainly in the East Coast bit and indeed in Scotland, we see significant potential to support the hydrogen economy going forward. So sorry, I'm not able to give an exact number in terms of the volume of today, but we're pretty comfortable and confident that there are enough projects to kick us off.
Okay, and for that East Coast section, are they mainly kind of big power generators that are your customers, or smaller off-takers like we've seen in the other projects?
Yeah, it's a mix. So yeah, you got a mix of those. Some of them I can't mention at the moment for data protection, but it is a mix of across the supply chain or demand chain, if you like. So you've got big off-takers, that's got a medium size potential off-takers, again, depending on how far they are from the network. So it is a mix, and it's good to have that mix to again sort of enable the business case of the program and again validate that interest from across the value chain of companies wanting to make that transition if there is clarity and of when these projects will come online. I mean, from a pipeline standpoint.
Brilliant. Thank you, Donald. That's great. So a couple of questions now for Bola and Rebecca. I think lots of people are interested in your hydrogen if they could have some of it. So for Bola, might there be an excess hydrogen produced that you could share with anyone else nearby? And Rebecca, kind of similar question to you. What's the mix, do you think, of utilisation at the plant and for other people to share?
I'd love to say yes, that we can tell you some hydrogen, but the Not3 project has been carefully sized specifically to meet KC demand, and it's really just to optimize our production costs and basically get the best levelized cost of hydrogen for the project. And whilst there might be some headroom in the design, in the actual infrastructure that we're going to be installing, we haven't made allowance for export of hydrogen. So we don't have compression stations and we don't have filling stations, such that it will be difficult to try and export any excess hydrogen that might be in the extra capacity of the electrolyzers. Okay. So the short answer is no, sorry.
I think probably a site as big as Kimberley-Clark as well, I anticipate that they will have more demand as they see the use and the success and deployment of the project. So yeah, that's an interesting one. Rebecca, for you?
Yeah, for us, it's around 50-50. So I think the site is about 6 tons, roughly, just under anticipated production. Obviously, subject to what volume Desna says yes to. But yeah, it'd be about 50-50. So we expect, and the benefit, I guess, that we have from an industrial customer is that is a more flexible load. So it means that on a daily basis, we don't have to, it's not 50-50 on a daily basis necessarily. And depending on the demand requirements, that can kind of be relatively flexible in that sense.
Okay. And then another question kind of, think is around your expertise, is around the aspects of the use in bus projects in the UK and in Europe. And I guess what we're seeing is the technology and the vehicles have got there before the production. So have you got anything to add around how you see kind of transport demand growing in the future?
Yeah, I think it's an interesting one. I think it comes back to that point about kind of the network perspective and the resilience that that's able to produce. From our perspective, kind of the build out program for most of the production sites is about 24 months, so it's about 2 years to build out, and a bus takes about 52 weeks to build. So you actually can end up in the opposite direction, where the plants need to make the decision before the offtake needs to make the decision. But I think fundamentally, it's a little bit of the chicken and egg side of things. But I think, we talk about if one of the plants becomes available, then actually it kind of creates a domino effect for the future ones. The problems that the market has had to date is, we currently operate the largest green hydrogen site, or previously did. There's just not that much hydrogen, whether that's grey, green, blue. There's not a lot for the types of things people want to do next. But I think with some of these HAR1 projects coming online and then HAR2, actually the availability of hydrogen being the problem starts to fall away, which starts to make it a lot more viable for the likes of buses and heavy transport. Whereas I think a few of the trials before maybe went a little bit too early in that respect, but I think the car really opens up that opportunity.
It's really interesting. I guess it's making me think of other things as well, in that, you know, there are sectors in the UK that are taking hydrogen and utilising it and really haven't got a push or a policy perspective as to the reason that they're doing it for. And it really is for competitive purposes, for them to be seen to be the best in class. So we know that Netflix and Amazon Prime and some of the big, you know, mobile off-grid media companies are really taking hydrogen to the heart and are making it useful for their perspective without anybody pushing them into doing that. Have you got any comment, Joe, on how you see maybe the sector growing organically in a way that we perhaps haven't anticipated?
Yeah, I think it's a really interesting consideration. I think the examples you highlight there are perfect, where perhaps there's certain industries that are willing to pay a premium at this early stage to get their hands on the product and clean up their operations. And exactly like you said, like Netflix are a great example of, even in terms of publicity terms as well for the sector and visibility, it's you can see somebody choosing it as a good choice to decarbonize their operations. In terms of how we move to a more, I guess, a freestanding industry, I think is what you're trying to say, Kelly, where it can grow organically. I think things like CBAM and the ETS will start to bite a bit more eventually, if depending on how the carbon price goes in coming years. It will eventually, it'll start to make just economic sense that if you are pursuing if you're looking at how your carbon price is going to increase, you have to clean up your operations or you're going to be paying more in carbon prices. So that will drive demand organically. CBAM, like I say, if there is a growing demand for low carbon industrial products, I think if anybody remembers, there was a quite niche, but there was a consultation last year on how the government grow this market for low carbon products, and they were looking at a few areas such as steel and construction materials to start with. And as the demand for these things grows, the demand for hydrogen is naturally going to grow because people want this, people are willing to pay a bit of a premium, or it's just competitive based on that carbon price. So I think they're going to be the big drivers for me. And then obviously, as well as kind of on the demand side, we've talked about already the supply side, how big an impact that networks could make to getting that price of hydrogen itself down, and that would massively improve the accessibility of it as well. If you're able to, as Donald referred to, kind of produce hydrogen in areas where it's pretty cheap and transport it through these networks to areas that need it, transport it through time and space, I guess, then you're going to be able to get that price down and drive demand.
Fantastic. And then just building on that, I think a bit of an interesting question. I'd be interested in the perspective of all the panel members. If government funding is unsuccessful to you in kind of future rounds, what happens next? What do we do? How do we look for other investors to kind of move this forward? I think, well, Bola, you've got your PAR 1, but what happens next with the future projects?
I know it's an interesting question, but I would say that although hydrogen has been around a long time, standalone electrolytic hydrogen is still a very novel technology, certainly at the scales that we're talking about. And at the moment, the cost of building them is quite expensive, and the levelized cost of hydrogen is just not low enough to compete with natural gas. So I would say that for the foreseeable future, near future, that government subsidy is still required to make these projects attractive, unless there's a huge spike in carbon costs like Joe was just talking about, that then suddenly makes it more attractive, or the new policies that means that, you know, heavy polluters are heavily penalized, such that, you know, hydrogen at a reasonable cost becomes attractive. So yeah, I think what I'm just trying to say is that, yeah, for the near future, we will need to have government subsidies for this project to make them thrive.
Great, thanks, Bola. Anything to add, Rebecca?
Yeah, I think the biggest challenge is that cost of production. A large portion of our cost of production is power. So ultimately, in some ways it doesn't really matter where the subsidy sits, whether it sits on the producer, the offtake, the power. But ultimately, as it currently stands, you can produce hydrogen low enough, even to be honest, not to compete with natural gas, but to compete with diesel. The sheer cost of it at the moment, it doesn't make it feasible. I think regardless of where that subsidy sits, it would need, someone in the value chain needs to get that benefit to allow kind of hydrogen to be a viable option. We see most people have electrified the things they can electrify, so it will just stop. I think people just won't do anything to move further forward on kind of that net zero perspective, as opposed to look for alternatives, because they've done a fair number of them.
Okay, brilliant. Anything else from the panel? So we have, I think I've covered most of the points in the chat. If there's anybody that wants online to come on and ask their question directly, I think now is the chance. So whilst I'm just seeing if there are any more questions, I would like to thank all the panelists today. I think that's been a really interesting discussion. It's so good. I really mean this, to hear about projects that are really moving forward and making headway. And I think for everyone in the sector to hear, that this is not when, it's now. It really is happening right now, and it's a really exciting time to be involved in this. I think we do often talk about, well, we're waiting for this policy and we're waiting for this strategy, but people have started to make way and headway themselves. So I think it's a really positive environment to be in at the moment. So I want to thank all the panelists for giving up their time today and for sharing where they are with their projects. It's really positive and really it's enthused me even more so to kind of keep going and make sure that we do as much as we can as the gas networks to support everybody in the space, kind of technologists and the manufacturers and all of the people within the chain. So I'll hand back to Michael if you're on, if you wanted to make any closing comments, and then we can perhaps give people a bit of time back.
Great. No, I mean, yeah, really interesting discussion. I'll probably just echo your thoughts. Thank you very much to our panelists for joining. To everyone who was here, anyone who attended the meeting, just to recap, obviously we will be sending over recording and slides afterwards. If you do have a question, you can contact us at capital.hydrogen@talon.com. Alternatively, you can just drop us a message on LinkedIn and we'll try and get back to you. And then yeah, as I said, if you've got any questions looking back at the recording or would like to speak to any of our members directly, then please do get in touch and we can connect you to the right people. But other than that, yeah, I'll give you just under 30 minutes back and hope everyone has a good rest of your day.
Brilliant. Thanks ever so much, and thanks panelists. Brilliant session.